All right, I've started the recording, and we're going to go ahead and take care of some business here before we get started. As we get started, please keep in mind standard government required disclaimers, and NFA, CTFC required disclaimers as well, require that I tell you that Commodities Future Trading Commission wants you to know that trading financial instruments of any kind, including options, futures, and securities, while they have large potential rewards, also have large potential risk. You must, as an individual trader, be aware of the risks and be willing to accept them in order to invest in the options, futures, and stock markets. Please don't trade with money you can't afford to lose. The NFA and CTFC are equally concerned. They want to make sure that you know trading in the foreign exchange market as well as the futures market is a challenging opportunity where above-average returns are available for educated and experienced investors who are willing to take above-average risk. However, before deciding to participate in Forex, you should carefully consider your investment objectives, level of expertise, and risk appetite. Never, do not, please, ever invest money you cannot afford to lose. You should know that every effort has been made to accurately represent this product and its potential. There is, however, no guarantee that you will earn any money using the techniques, ideas, or products presented in our website. Examples on our website are not to be interpreted as a promise or guarantee of earnings. CTFC would also like you to know that hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as liquidity or the lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation tonight is being made that any account will or is likely to achieve profit or losses similar to those shown, which is good because we don't show any equity curves during our presentations. Keep in mind also that all information presented today during this webinar on our website, any of the videos on YouTube, or any of the materials we produced for that matter, are strictly for educational and research purposes only. By viewing this webinar here, your attendance implies that you are acknowledging these disclaimers, and so your continued presence tonight is an implied understanding that you continue with a full understanding of what I've explained to you here today. It's also important to remember that we are not certified trading advisors. That said, you as an investor should consider reaching out and working with professional trading advisors when making investment decisions. Thank you for allowing us to explain that to you, and welcome to the webinar. Good afternoon, good evening, wherever you are across the globe. My name is Michael Lydick, and just a quick roll call shout out to everyone who's here, some 50 some odd traders this afternoon. It is a pleasure to see new and old faces alike. Mr. Hardman, welcome. Mr. Healy, good to see you. Erwin, Jason, Johan, Kevin, and Kevin. There are 3 Kevins. Kevin D, Kevin K, Kevin L. It is a privilege to have you here today. Welcome everyone to Anthony, our newest customer over in the UK. He doesn't hold a grudge for the revolutionary thing, but we'd like to keep him at ease and make sure that he knows we're not hostile anymore either, and that whole T misunderstanding is behind us. Pat, welcome, long-time vet, long in the tooth Flux customer. Rob, good to see you as well down south. Samson, I take pips mercilessly from the Forex. Good to see you here as well. Thomas and Wallace, welcome, and anyone I forgot, it's great to have you on board today. I promised a couple things this afternoon just so we're clear. Sort of your Bill of Rights, knowing what to expect in the webinar moving forward. First thing, I always try to educate rather than sell. While this is a sales presentation and we would love for you to be on board with us as a customer, my ultimate goal is to enlighten you with regards to what we've learned as a company, what we've learned as a community of traders. And so you do have the right today to interact with other people here today. In a moment we'll take a poll to see how many of us are actual customers and how many of you are on the journey seeking to understand if working with us would be profitable or not. You do have the right also to ask hard questions. I promise that I'll answer every single one of them. And if I don't, please keep in mind that sometimes the questions scroll up the screen and I don't see them. So please feel free to copy and paste the questions so that I finally get to them. It's not that I'm avoiding them, you or them rather. It's just that I didn't see it. And sometimes the pace of my thoughts exceeds the scrolling speed of the questions. So ask whatever you want. I promise Eagle Scout honor on my children's lives to answer as truthfully as I know how to. And if it takes 2 or 3 tries to communicate that answer in a way you understand, I'm happy to do that. So patience is employed here. Third, I don't expect you to believe anything I say. This whole presentation is designed to help you see what the banks are doing to us. And I'm specifically focused on bank timing. And so we've created an experiment today that you're all participants in, you're all taking part in. And I've constructed it in a way that reduces, if not entirely rather, removes the BS factor from this. That is to say, when we're done here today, nothing I say really matters as much as the results of the experiment. And so a lot of times people will ask for things like audited trading records and color of my underwear and what are your kids' names and can I have a written photocopy of your bank statements. And what I really want you to learn here today is to remove me from the equation. Is what I'm teaching and providing to you today. If I had a heart attack at midnight tonight and I didn't exist tomorrow, is what I've recorded and saved and presented in these webinars, is what I've built and created in the software, left behind in the training manuals, enough for you to take back a substantial edge from the banks. That's my philosophy. So it helps me take my ego out of the way, takes my sensitivities out of the way, and it really brings everything back down to the science and the math of the system. Why are we here today? We're here today because we want to know what the markets are going to do next. We want to know what are the markets we trade going to do next. That's what trading represents. It's an order in a market based on an assumption that the value of the instrument will be higher or lower in the future. It's an order in the market based on the assessment that the value of the instrument we're trading will be worth more or less in the future. And for going on 9 years now, most every customer I've met, including myself in the past, has indicators that are focused on what happened in the past. And there's about a 90 to 95% failure rate in the industry. That means when NinjaTrader opens up an account with you, when you file a new application for their brokerage, they know what the failure rate is. They know how long the average customer falls flat on their face and loses everything in their account. And so this number hasn't changed in close to 25 years that I know of after talking to customers who have experience with those things. All the brokerages I've met and talked to, the failure rate for people who are focused on what's happening in the past is pretty high. And so I want to show you today a different number that's not negative. I want to show you today a number that's closer to a positive, based on a technique that my partners and I developed here almost a decade ago to help break the cycle of failure, to examine what the banks were doing and understand fully what it was that was forcing us to lose money day after day. And it's all based on a very simple premise. Banks are behaving like casinos. They make the rules, they set the edges, they make almost all of the money. When banks behave like casinos, these three things come into play. They make the rules, and I have a very important thing to tell you today. Their rules that they're playing by are not the rules that you think they're playing by or that you're playing with. They set what edges work and don't work. And I have news for you. If you're using a lagging technical indicator, if you're watching all of the traditional things that every other trader is always watching, I guarantee you that they have determined your edge to be dull and relatively useless. And then the most important behavior of a casino, they make almost all the money. How many of you believe right now if I gave you $10,000 and said I was going to fly you to Las Vegas, that you could take your $10,000 and in a year turn it into $20,000? How many of you have 100% confidence right now that you could do that? You could live off of the earnings and turn a $10,000 or $50,000 account into a $20,000 or $100,000 account in a year's time. How many of you believe in your heart that's possible? The answer is almost none of you, because casinos don't play fair. The house always what? What does the house always do? The house always wins. And so how big of a stretch is it for me, Anthony? How big of a stretch is it for me, Sydney, to say the investment banks always win? Are we too far off in that initial assessment? No. We understand implicitly that something is broken, that it's not fair. What do we do about it? One of the things we need to do, and one of the things I'm going to show you today, is in regards to the rules. What rules do they follow? What laws do the gangsters honor amongst themselves and the other thieves? I want to show you today what edges they're employing. And most importantly, when I say they make almost all the money, I want to help you make some of your money back from them. My goal here before the Lord takes me home is to share this with as many futures, Forex, equities, and binary options traders as will listen. I don't even care if you buy the software. I want you to leave here understanding what they do. This is like therapy in a sense where I as a therapist get to tell you in a safe place about your destructive behaviors. And today, all of your mommy issues are not mommy issues, they're bank issues. These people are not our friends. They do not love us. They're here to engorge themselves on your accounts and our accounts. And so I'm going to show you today what we've done to help you believe what I'm telling you. And this is the last thing I'll write before we look at actual charts. Okay, we have a no PowerPoint policy today. Let me show you what I mean by that. Every week, I do the same thing. When I first started in this genre, when I first became a tool builder in the financial instrument markets, I had no business or marketing degree. I still don't. I don't have a sales degree. I don't have an MBA. I'm really bad when it comes to business in general, but I'm really good at building things. I'm really good at math. I'm good at understanding how to design tools that are useful for people. And so I've set up today an experiment. You've been part of it since Tuesday, actually. And let me just tell you how this will work in proving what rules the banks are following, in proving what edges the banks are using. Now, we'll be using NinjaTrader as a platform today to show those proofs, but let me go into detail as to how that works. Every Tuesday, an esteemed colleague of mine logs on to our website and she uploads anywhere between a dozen or more histogram forecasts for the futures markets you trade. So at the close of business, at the close of the markets on Tuesday, my fat rear end waddles up these stairs and I write an email out to everyone talking about how the banks use time to trade. But here's the kicker. Here's what no other NinjaTrader partner can do. Here's what no other TradeStation developer can offer. No one in the MT4 universe can do what I'm about to give you, or would have already given you. Every Tuesday night, we put out the market times for the days ahead. Every Tuesday afternoon, I give out the market times for the days ahead. That is to say, I make an audacious claim that we know, using 5 patterns I'm about to teach you, when the markets you trade are most likely to go up and most likely to go down. Now, how do other vendors do this? How do other partners in the ecosystem snooker you out of your hard-earned money? They tell you after the fact what you should have done. They tell you after the fact which trades they might not have taken. They tell you after the fact what the market conditions would have spurred them to do or not do. In hindsight, we are the only company in the world that I'm aware of for retail traders that exposes what the banks are doing and tells you what they should do into the future. Now, that's a pretty ridiculous thing. If I were self-harming, this experiment would be the exact way I would use to choose to destroy any chance at a good livelihood building tools for traders. This is the hardest way, but it's also the best way to show what banks are doing. And so we come out of the markets together. You're here right now. If this was a map at a store in a giant mall, there would be a sign that says, "You are here." And we come out of the markets together to see, how did the histogram forecast work on Wednesday and Thursday? Was there anything relevant occurring at these times? And so in about 25 minutes from now, I'm going to ask you, what percentage of the time was the software accurate in telling us when to expect selling pressure in these markets? I'm going to ask you in about 25 minutes time, what percentage of the time the software was accurate in telling us when to expect buying pressure in the markets we gave histograms out for. And I can tell you now, having done this for almost a decade, that not once in the history of our years as a tool builder has anyone said the results were less than 60 to 70% accurate. That's a pretty bold claim, right? But I don't say this number. They say this number. Jason and other customers will tell you what their experiences are. They're not affiliated with me or the company. They're just people who own the tools or who've been to these webinars before. So, to understand the percentage accuracy, thank you, Parmajit. To understand the percentage of accuracy, we need to understand what the histograms represent. We need to understand what those histograms mean. What are these big bumps and hills and valleys on the screen? What do they represent? When we look at these markets individually and we see all this crazy fakakta stuff up here, what is it telling us? What do these bumps and dimples and doodads mean after the fact? Because if we don't have that as a baseline, it's not going to help us. We won't know what to do or what to expect or what to look for in any of these markets that I'm about to show you. Okay? So let's go ahead and get started. Is everybody on? Is everybody on the same page with me right now? We kind of know where we're looking, what we're going for. Okay. And again, you have a right to question me at any point along the way. Now, let me scroll over to the link that I sent everyone 2 days ago. And if you're just joining us a little later than normal, welcome. If you look in the GoToWebinar chat box where you're typing stuff to me and I'm typing stuff back to you, Jason, not necessary. I appreciate your enthusiasm, brother. Thank you, though. You're doing everything you need to do, just communicating with one another today. This is the web page I sent out to everyone on our mailing list. And it has a crazy list. And when you click on any of the links, this is what comes up. I've trained now over 4,000 people, I think, on interpreting this. And what I'd like you to understand, why am I talking like a talk show host right now? Calm down, Lydick. What I'd like you to understand is that what's on this chart right now represents a new language. It's a code of sorts, if you will, but more importantly, it's a language. Computers right now can't really talk to us the way I'd like them to. I'm excited about things like Siri and Cortana and the new Samsung Assistant. I hope to live long enough to see those kinds of efficient assistants in place, to be able to communicate in my native tongue with a machine that has some understanding and comprehension, I think is just an exciting time to be alive. But right now, the Flux software can't talk to me, but it can communicate through a graphic language. And so today I propose 5 words, and those 5 words, we'll be done learning them by 5 o'clock. And then once we know the words, you already knew what the computer was trying to tell you on Tuesday in crude futures, for example. For Thursday, it was trying to warn you. It was trying to tell you something. But you don't know what this chart is trying to say at first. Jason, remember when you first started following us? Vanessa, Kevin, Anthony, Parmajit, do you remember when you first started following us how confusing these histograms were? You would say things like, I know they're important, I just don't understand what they're trying to tell me. What does it mean when it goes up? What does it mean when it's big? What does it mean when it's small? Does the color mean anything? Why are there 2? And so I want to bring you to a point today where the language isn't an obstacle. I want to get you to the point where maybe you don't get it 100% of the time, but you're in a much warmer place, right? You have a warmer, fuzzier feeling when you look out on this. I want you to understand what these times represent, okay? And so I'm going to use this thing that I sent you on Tuesday to show you what actually happened on Thursday at these times. Because if this works, then we know something the banks don't want us to know. If this works, we know something the banks don't want us to know. And anything they don't want us to know, in my head, is a great thing. We should ruthlessly pursue learning it. Okay, so what do these histograms represent? In your GoToWebinar box, you'll see there's a section labeled Handouts. Can everybody see on here where it says Handouts? 4 of 5. If you expand those out, you'll see that I've got a number of things in there. One of them is called 5 patterns. 5 patterns. And today I'm going to recreate that with you. So if you just click on those, when we're finished, you're going to have the Rosetta Stone. The Rosetta Stone, for those of you that don't know, was a rock that they found that helped all of the archaeologists understand what all of the other Egyptian hieroglyphics meant. You see, Vanessa, they needed this one stone to unlock what all the other hieroglyphics meant. And once they had that, once they understood what all these letters and symbols meant, they could go back and decipher all of the hieroglyphs and all of the pyramids and the writings and the artifacts. But they needed this one translation, this one, what does this mean, what does that mean, description. And today, I want you to know that this is the Flux Rosetta Stone. These 5 patterns right here. And I give it to you freely. Let's go on a journey together in the next 17 minutes and uncover the meaning of these 5 patterns, also detailed in vivid detail in your guide to the histograms, also in your histogram, your handouts section of GoToWebinar. meeting here today. So the first thing I want to talk to you about is pattern 1. Pattern 1 is a histogram that looks like this. It's a histogram below the zero line, and it has a timestamp underneath it. When you see that bump on a conventional flux histogram, the implication is that when we arrive at this time in the future, the market will experience buying pressure. When we arrive at that bump time in the future, we'll experience potential buying pressure. Now, just know a couple things. The height of the histogram isn't as important as you think it is. In traditional lagging indicator packages, the oscillator had these big and small curves, and we were told by the idiot vendors and partners in the ecosystem that the size of their oscillator was important. Size matters, according to them. In time, size doesn't really matter. It can, it might, but it's more of a coincidence than anything of importance. What's more important is the time. The time itself is the most important thing. And so there are two instances of a pattern number 1. The first instance is an occurrence in the direction of the trend. That is to say, Jason, if the trend is moving up at a time we were expecting buying pressure, Vanessa, we're expecting the market to move up. The understanding is that if the banks are in fact going to impart buying pressure at that time, if that was a correct evaluation in the future, then we should see the market move up, climbing the stairs, going up in the elevator. The rocket ship takes off and goes to space. Whatever analogy works good for you. However, one of the things you need to consider is this. If the market is in a downtrend, when we arrive at a buying pressure time, the banks are sticking their finger in a leaky bathtub. And so what will happen is price, when buying pressure is expected, will stop falling. It will stabilize and chop. It'll go into a consolidation range if they exert buying pressure in a downtrend. So when we see candles consolidating or chopping around a buying pressure time, we can assume that either the market is in a downtrend or it's about to assume a downtrend. And one of the ways to trade that pattern that I'll show you today is to look for a breakout or a breakdown, because the banks can only hold their finger in the hole of the dike, of the bathtub, of the dam for so long before the dam cracks. Does that make sense to everyone? So in a real-time environment, in your guide to the histograms, it'll look like this. When we arrive at a buying pressure time, if the forecast was right, we should see price above the trend line push up, like someone pouring gasoline on a fire that was burning dimly. We should see the market push up at the times we were expecting buying pressure, higher highs and higher lows following. If the market is in a downtrend, Jason, can you see the difference? If the market's in a downtrend, when we arrive at those buying pressure times, it's as though the market makers are pouring water on a fire. In this case, the fire wants to burn the market down. And so when we arrive at these buying pressure times, you'll see that the market tends to consolidate. It goes into a range. Sometimes it will increase and start to go up, but most of the time, Jason, it'll break down and continue dropping. And so in a downtrend, we expect consolidation. In an uptrend, we expect gasoline on the fire, big pushes up. All right, that's pattern number one. Pattern number two is obviously the opposite of pattern number one. When the computer puts this graphic on your screen, if it had a voice, what is it trying to tell us, Melissa? What is it trying to tell us, Jason? Sydney? If it could speak, what is it saying when it puts that histogram on the chart for a future moment in time? It's saying, yeah, when you arrive at this time in the future, there is a higher probability of selling pressure, and we expect the banks to sell. Computers don't sound like that. They do in the movies I grew up in watching as a kid, like war games. And so that explains this picture. When we're in a downtrend, the market will usually pull back up and then drop like a rock. You're going to see a lot of examples of that today, right? Nothing like the day before a holiday where most of the people who blow up other people can't wait to blow up even more people, and the president drops the biggest bomb ever dropped in the history of the United States in a Muslim country. If you were ever going to see selling pressure, Sydney, today's the day, right? If you were ever going to pay attention, there aren't very many traders in the world who are saying to themselves, let me put a couple contracts long today and see what happens by Monday. So we're going to pay particular attention to this pattern today. We should see this one in crude. We should see this one in any index. But keep in mind, just like pattern number one, if we get to an uptrend and we're expecting selling pressure, Sydney, a very unusual thing happens. They stick their finger in the dam again. They stick their finger in the holes of the bathtub, and it keeps price suppressed. They're holding price down. This is usually when they're taking initial profit in the run up. And we know from the examples, those word images of a bathtub leaking all over the place, that eventually it breaks down and the market rises. And so one of the ways to trade a selling pressure signal in an uptrend is to watch for the breakdown of the consolidation range. It tells us essentially, Jason, that they've run out of steam. Their finger hurts. They can't hold price down any longer, or they've taken as much profit as they want to in this first stop, and they're going to let the good old people of the markets let it go higher. Does pattern number two make sense? There is an A and a B version depending on which direction the market is moving at the time. The highest probability setups are the signals in the direction of the trend. Now, is anyone perplexed yet? We're still at a high school level of explanation, I think, and I shouldn't have left anybody behind. But if you're left behind, please let me know. There's not anything embarrassing about it. I forget. Here's a confession. I forget what it was like to learn this from scratch. I am guilty of being arrogant. But pattern one, you have coming into a downtrend. There are two possibilities for every pattern. Jason, we don't know in the future if the market will be in an uptrend or a downtrend. We can guess. I have some pretty good techniques for that. But on the local time frame, if we arrive at a pattern one, If the market is in a downtrend, right here, right, red line moving down, we expect consolidation with an eventual breakdown. If the market is in an uptrend, we expect immediate pushes up. For a pattern 2, if the market is in an uptrend, we expect suppression and consolidation with an eventual breakdown upwards. Or if the market is in a downtrend at a selling pressure time, we expect it to drop immediately, what I call a jumping off the cliff trade or a diving board trade. Okay? Pattern number 3. No, you're fine, man. Pattern number 3 is, yes, Vanessa, you got it. A light bulb went on in your head and I can feel the warmth from here. Good for you. It took me a while to be able to teach it that way. No, don't laugh. I am not the best teacher in the world, by far. So if you got it, that's a victory in my column. I can tell my wife I'm good for something. Pattern number 3 is craziness. It is the histogram that just goes all over the place. It is a bunch of up and down times in a very compressed time period. You see, normally the histograms have some space between each other. But occasionally, you'll get histograms that look like this. And in the end, this pattern represents C, H, O, P. It represents potential chop. The computer is trying to communicate something to us, and it's saying, please don't lose any money. This is where they usually take it. This is the perfect storm without Mark Wahlberg or George Clooney. The boat is going to get tossed around. Somebody's going to die. And so when you see a pattern 3, this is what it looks like. But Sydney, there's a rule set associated with it that I'd like you to learn if you're up for it. When you have a histogram that goes into a chop zone, here's what happens. Note the time the chop zone starts and note the time the chop zone ends. Note the time it starts, note the time it ends. And then over the course of that span of time, Vanessa, I want you to note the high of the chop zone and the low of the chop zone. It should form a nice rectangular pattern when you see it, with false breakouts on either side. At the end of the chop zone, Sydney, the market will usually pick a trend direction, meaning if it comes and breaks out this way, Vanessa, it'll probably trend that way to the next cycle time. If the market closes and trends down this way, or rather closes down this way, the market will probably trend down until the next cycle time. Inside of this, you are one kernel of an Orville Redenbacher microwave popcorn package. There is nothing stable about a chop zone. And so when we first started, I had a customer whose name was Dawn who traded the E-mini S&P using a market profile technique. And she said to me, Michael, I look at your histograms and I see which days and which times of day of those days are choppy. And I don't trade my system then. And I remember her telling me that her accuracy went up about 10% to somewhere over 70% on her trades. She placed a 2-point target stop with 2 contracts in the ES. And when she saw a pattern 3, Vanessa, she heard a rattlesnake noise. If you're into westerns, it would sound like this if a pattern 3 had a noise effect. Wah, 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 wah. Nothing good ever happens. If you're a Star Wars fan and you see a pattern 3, it would sound like this. Nothing good ever happens in a pattern 3, but for understanding the trend direction out of the zone. They're going to come flying out of it with volatility at that point. And so if you must use a pattern 3, the banks want you to be in here, stop filled, order filled, stop filled. Ah! Order filled, stop filled. Gosh darn it, flag it, target filled, stop filled, stop filled. Ah! That's what happens in there. Don't go in there. It's like when the teenager in the horror movie says, hey, let's go in the driveway and walk across the street to the cemetery. We'll be safe there. No, don't do it. Pattern 3, everybody. Are we good on patterns 1, 2, and 3? Pattern 4 and 5 are weird. Pattern 4 and 5 take a little extra brain power. But I promise if you understand it, or at least allow me to define it mechanically, when you see the results, you will be pleasantly pleased. Allow me to define a pattern 4. A pattern 4 is a variation of a pattern 1. When you see the histogram, Vanessa, it looks like this. It says, hey, I'm a selling pressure histogram. What are you doing? I'm just here trading. Okay, watch out for selling pressure. That's what this is. We know what that normally looks like. It normally looks like this. And in both instances, Sydney, and I'm just picking on you because you keep answering when I ask you stuff. In both instances, Sydney, when we come into a pattern 2, the market will almost always come up. You see what I mean by that? When we come into a pattern 2, the limo that brings the bankers to that time is always driving price higher into that time. That is to say, the direction into a pattern 2 of price action will always look like this. Everybody understand that? But a pattern 4 doesn't do that. A pattern 4 has an identity crisis. And it says, hey, I know I said selling pressure, but I'm going to be buying pressure instead. What? Let me explain. This is a mechanically defined signal, meaning I can only ever put a green arrow when it meets a very certain special rule set. Let me show you what I mean. Occasionally, the markets invert. They do the exact opposite of what was expected. And so, Sydney, we normally expect if this is the time the market was supposed to sell off or experience selling pressure, Sydney, at this time, I would have expected the market to arrive this way. You know what I mean by this way? I would have expected them to climb the stairs up into a high. But every once in a while, they go this way, Vanessa. They go the exact opposite direction into a new low. And so a pattern 4 says this: if we arrive at the histogram time that was supposed to be selling pressure, and either it, the candle before, or the candle after has violated the prior swing low, if we are below what used to be a floor and it's now a ceiling, either the wick or the body of the candle, then Sydney, I'm going to assign a green arrow to the bottom of that candle. Does that make sense? Because it's behaving with the exact opposite polarity. Jason, they're stretching the rubber band down, and when they let go, it should go this way. We were expecting them to pull the rubber band up and then snap it down. And so in the real world, when it happens, it looks like this. In the real world, we have a prior swing low, and when we arrive at that histogram time, Sydney, they didn't drive the bus up. They came all the way down, they broke through the low, and then they did this. And so that candle gets a green arrow. And then they came down, and the second time it was equal to the first time, so that candle gets a green arrow. And Sydney, you could almost say in that instance, I can delete the red circle here and put a green dot, right? It's a psychotic candle. It has a dual personality. Those of you who remember the movie Sybil will know what I mean by dual personalities or multiple personalities. It says selling pressure, but everything it does behaves like a buying pressure signal. And Vanessa, these patterns usually occur before major trend reversals. These patterns generally represent exhaustion. The bankers look at each other and say, Gottfried, do you want to sell anymore? Goodness, Johnson, I've sold all morning. I'm tired of the blasted sales. What should we do? It's selling pressure time. Should we purchase? Prices have never been this low. Yes, let's purchase. That seems like a wonderful idea. That will totally confuse them too. Will the other chaps know we're buying? Make sure we put a lower low in place. They'll all know. And that's a pattern 4. But I want you to understand we've mechanically defined it. There's no way to misinterpret a pattern 4. If candle 1, 2, or 3, candle 2 being the selling pressure time, if their lows are equal to or less than the prior swing low, Jason, it gets an arrow. And that's all I'm ever going to do today once we get past this last pattern, the 5th one. And that's how we're going to interpret a pattern 4. 1, 2, 3, 4. Ready for 5? Guess what? It's the exact opposite. Hey, it's just me, buying pressure histogram. Don't worry, all that ever happens here, it's buying pressure. I'm never going to do anything weird unless it looks like this. If you arrive at a buying pressure time, if you arrive at a buying pressure time right here, and either the buying pressure time itself, the signal to the left, or the candle to the right are equal to or greater than the prior swing high, Sydney, it gets a red arrow, like a scarlet letter. You shall wear the scarlet red arrow, but I want to be a buying pressure time. No. You get a red arrow. Aw. You were a naughty buying pressure time. You were supposed to go down, and look at you, you're all the way up here. Oh. These patterns will generally occur near market exhaustion times, near trend reversal times. And so when we see them in the real world, Jason, they look like this. When you see them in the real world, check it out. Candle number 1, candle number 2, candle number 3. Candle number 1 has a higher high. Candle number 2, Vanessa has an even higher high. You get a scarlet arrow. Aw! You get a scarlet arrow. Aw! And many times, Sydney, those things will occur on candles that look like this. Do you see what I mean by that? And you know what that candle represents, right? If this was Julio Iglesias, that candle would be saying or singing, no más, no más, no más, no más, no más, vamos a vender, we're going to sell. Okay. Guess what? You freaks all know 5 patterns. We as a group now understand what to do when we see any of these 5 patterns. In your guide to the histograms, Vanessa, there are 5 patterns, and this week I added 2 more. A Canaveral. They're the last 2 pages of your book, 4 pages of your book. I put them there because, quite honestly, everybody was bothering me about it. We're not going to go over those 6 and 7. Those are advanced patterns, and I don't want you to look at them. We are, however, going to focus on these 5. So, what the hell happened this week? Well, what the hell happened was this. On Tuesday, I sent everybody the market times for the different markets 2 days in advance. And every one of these signals has the potential for what now, Jason? Every one of these signals below can be what? A 1 or a 5. Any one of the signals, Vanessa, below the histogram can be a 1 or a 5. Any one of the times above the histogram can be a 2, or when we get there, we might see that it's a 4, Jason. And then, what were we expecting in here? Chop, 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 chop. Kevin had a great question. He said, would you say that pattern 4 or 5 is a potentially stronger pattern than that of 1 or 2 because in potential profits, it's out of phase? Kevin, I don't think you sound like that. Just more fun for me if I invent a voice in my head. The guy who first discovered this, the guy who first blew the whistle on the banks, here's what he said. Paraphrasing. The inverted moves, Kevin, are quite oftentimes usually the strongest moves. Did you hear what I said? Pattern 4s and 5s are usually the farthest moving, fastest moving signals of the 5 that I've taught you, in his words. Because of that, Kevin, if I had a favorite, you know how parents say they never have a favorite, but you know they do. You know they like your sister more than you, right? If I had a favorite, that's my favorite right there. A pattern 4. It's the one that taught me to look for 4s and 5s because it's that fast, that furious, that sexy. I love it. Okay, but that's a great question. Okay, what I'm about to do next will mystify you. Prepare to be amazed and mystified. On my chart is the same histogram that Kristen was good enough to send out to you on Tuesday night. It is the exact same time. It is the exact same histogram. Take a look. Before, after. 11:18, pattern 3 with the chop. So every one of these times, Kevin, Vanessa, were the times that we were expecting those patterns to occur, right? Now, think how crazy it would be. Think how crazy it would be if I could give 18,000 people on my mailing list those times on Tuesday for Thursday in crude on the day we drop a bomb in the middle of Afghanistan that's bigger than any bomb we ever dropped. Vanessa, what are the odds that any of these signal times are going to work at all, even close? On a scale of 1 to hell no. Pretty hell no, right? Very small. Everybody knows that empirically. And it's important for me to stress this going in because some of you are going to talk yourself out of how amazing this is. You're going to say something like interesting, fascinating. That's interesting, Michael. No. Rosie O'Donnell is interesting. Tofu is interesting. Turduckens are interesting. This is not interesting. What you're about to see, ladies and gentlemen, is the truth of the market you trade. Ready? Ta 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 ta. Okay. What do we got here? What were we expecting at 633? Buying pressure. What happens to buying pressure times above the moving average? Fire. What were we expecting at 727 2 days later? We were expecting the market to go into a consolidation range and then, Sydney, do what? Break out of that range, right? Take a look at the pattern. Sydney, did what happened at 727 look like what we said it should look like when we get there 2 days later? Okay. Which one of these signals, Michael, does 815 look like? Sydney, which one of these patterns does 815 most closely identify with? Hint number 5. It's a higher high, and the higher high after it is a higher high. It is this candle right here. See it, Sydney? See it now that I did that? Don't worry, this is the hardest one. How cool is it that it did what we were expecting it to do 2 days later? Does that kind of blow your noodle? It still blows my noodle, just a little bit. So guess what I get to do? Vanessa, I get to come over here and give it a scarlet arrow You shall have a scarlet arrow. Aww. And on the screen, I'm going to put it here. Pattern 5. Pattern 5. Pattern 5. And Sydney, what were we expecting it to do after the pattern 5? Go down, right? See, some of these questions are rhetorical, by the way. So that did what we were expecting it to do. This one did what we were expecting it to do. 842, does it do what we were expecting it to do 2 days later? Yes. 954, it's in the chop zone, but look, that's a signal in the direction of the trend, just like this one, right, Sid? Did it go up like it was on fire and we poured gasoline on it? It did not consolidate at 10:03, but it only had 2 minutes. And Sydney, guess what? The candle at 10:15 does the exact same thing that its little brother did at 8:15. And Vanessa, guess what? You shall have a scarlet arrow. Aww. And both candles are the same height. So pattern 5 has candles 1 and 2. And Sydney, what did we expect the banks to do if we ever saw that pattern 2 days later? Jason, what did we expect them to do if we ever saw that pattern 2 days later? I'm going down, 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 down. I'm going down, down, down. That's a bad Bruce Springsteen impression, but it gets my point across. Now, if you're not freaked out yet, you will be, because we told you 2 days ago, before we knew that Trump was going to drop a bomb on Al-Qaeda, we're going to get him. Dead or alive, we're going to get him. Going to drop a big bomb on him. At 10:45, I told you 2 days ago that the banks were going to drive the price of CL sideways or down. Okay. And Kevin, this is the first time it crosses the moving average. Do they mean business when 10:45 kicks in? Damn! Heck yeah. 11:18, we get our first trend signal. The bottom histogram is a trend histogram. It's supposed to tell us what the general flow of the market should be. And 2 days ago, the understanding was that crude would trend upwards until 11:18, and then Vanessa, it would start to trend downwards until the end of the day. And that's why we call it a power zone, because this zone of time helps us break down what the trend should be. Can everybody notice what color the trend was before 11:18? Jason, can we say that the trend was upwardly sloping in blue up to about right here? And then we can say that the trend line started to do what? Started to go this way, and now price is all the way down here. But we said that 2 days ago. Bomb, Al-Qaeda, NATO, Russia, inventory report, natural gas. All of those things apparently didn't matter as much as they wanted us to think. So we can say, hey, the trend started going down at 11:18. Now, if you feel sweaty, nervous, vomitous at any point, it's okay. I used to feel that way when I did this. What was supposed to happen at 12:27? Kevin, we were expecting what? Buying pressure, right? At 12:27, we're expecting buying pressure and a downtrend. What does that look like? It looks like consolidation, right? If we go back to our pattern here, the 5 patterns, A green dot in a downtrend goes sideways, and if we get a breakout candle, it will continue down. We never got the breakout candle. Kevin, it stayed in the range, right? But it just went sideways. Vanessa, look, it finished right about where it started. You see here? The candle closed. It came back, it came back, it came back. And what were we expecting at 127? Selling pressure. Jason, was there enough of a curve there to say that they tried to sell the market at that point? Can I call this a pivot? Is that okay? All right. The only other time I have is 3:15, and at 3:15 everyone's leaving for Good Friday, but I'm going to call it a failure because it didn't really, well, you know what, I'm not going to call it a failure. Screw that. Jason, can I call that a success? Yeah, we'll take a vote. If it came down to here and then went straight up from 53.08 to 53.23, and it only went down one tick, can I call 3:15? Okay, Pat agrees. We can say it worked. I couldn't see the wick because I don't have my glasses on. How many of you have come to webinars in the past when you know I'm getting worked up into a tizzy and I'm starting to calm myself down and realize I've been a little Robin Williams for a few minutes? Raise your hands. I'm coming out of the Robin Williams mode to get serious with you. I gave you these histograms. George says 3:15 stopped out. Okay. If you follow the caveman system, George, you're absolutely right. Total agreement there. But what we're trying to find is, did the market go up at 3:15? Was there a general change in direction? But if you followed the caveman strategy, you're absolutely right. You would have been stopped out because your stop was at the dot. Good point. Thank you for sharing that. Let's take that one out. Let's pretend George is right, and we shouldn't count that one. On a scale of 0 to 100, 0 to 25%, 25 to 50%, 50 to 75%, 75 to 100%. What percentage of time was it 0 to 25, 25 to 50, 50 to 75, or 75 to 100% of the time? Which one of these blocks of accuracy can we say the software occupied 2 days later? Can 10 people please answer that for me? Was it 0 to 25, 25 to 50, 50 to 75, or 75 to 100? I don't care what you say. Just be honest. Don't be a smartass. That's 1, 2, 3, 4, 5. I need 5 more people to answer that question. 6, 7, 8, 9. One more, please. 10. Yeah, thank you, George. Okay. Every week I do the same thing. I'm going to do it one more time. Is there anyone uncomfortable with me saying the accuracy was at least 60 to 75? Is there anyone here today? And remember, this is recorded for the webinar. People are going to see this later, so be honest, be truthful. Based off of your experiences in the past and all the webinars you've attended with everybody else and what you saw me explain and what you understood, is it okay, or is there anyone who'd say it's not okay that I say the accuracy was at least 60 to 70%? You all said 75 to 100. Only one of you said 50 to 75. Wallace, are you okay with me saying 60 or 65? Okay, cool. Now that you've admitted that, I feel like we can have an honest conversation with each other. Now that you've said that, we have freedom. Freedom how? We have freedom to go back and answer this question. He pauses for dramatic impact. My theory, my experiment, was designed in a way where I, as a person, as a commentator, was irrelevant. And I said, I want the software to generate the times. I give them to you in an email. We let them float in the water for 2 days. We come out of the water 2 days later, and we look and see what percentage of the time was the software accurate. Most of you said 75 plus. Nobody disagreed with 60 to 70. Wallace, Jason, what's the failure rate in trading? Based on your personal conversations with other people and what I've said and what you know to be true. How many people, what percentage of people are failing every day? Out of 100. Ballpark it. Okay, you say 50. Anthony says 95. Okay. Wallace, can I say at least 60 to 70% of people who try to trade every day fail? Would that be okay? Sure. Okay, now I'm going to make a logic leap here, and I want you to tell me if it's a safe one. Ready? If the banks have a plan in advance and follow it at least 60 to 70% of the time, aren't traders using lagging indicators just following their plan? You see what I mean by that? And I have empirical proof of that. Ready? How many times do you place a trade and it immediately goes against you? Like someone was watching for you to trade. See, we have these experiences and we explain them away, we pass them off, we pass them over as our sucking. Right, Melissa? I must be really bad because every time I place a trade, it goes exactly, I should do opposite day tomorrow. Anyone ever have opposite day in their trading journey? I'm going to do the opposite of everything I think I should do. Or I'm going to hire some kid from college and I'm going to place a trade, and his job is to place the opposite trade in a live account on the other side of the wall in the living room. And if he does that, I bet I'd make a fortune. How many of you have had that thought? I have. So based on what we just saw here today, isn't it possible the banks are luring the majority of people into precise traps that look like longs but are really shorts? look like shorts but are really longs. Isn't that what we're saying? We are grease in their financial gears. We are liquidity. Slaves building their pyramids. And they use time to enslave us. Haven't we just proved that here today? And how much of that did I have to do with any of it? Me as a person, my personality, you don't like, I sing, I sound funny, I'm too loud, too quiet. How much of any of that influenced what happened? Every one of these positions was a precision trap designed to make people think the market was going to go up when it went down, go down when it went up. Any questions? How many of you feel like you got schnookered? How many of you feel like you got schnookered by all the other ecosystem partners and the trade station vendors and this guy and that guy? How many of you feel like you got sold a bill of goods? You just need my fancy, almost zero lag, whatchamacallit, Jimmy Changa indicator. Every time you see a green arrow, you buy, buy, buy. Every time you see a red arrow, you sell, sell, sell. One day you'll be famous and have six-pack abs just like me. Look at my trophy wife in these pre-packaged, photoshopped pictures of my West Palm Beach home. Act now and I'll take 90% off the software price and include a free keychain. We all did it. Some of us still do it. I did it. Spent like 30 grand on software. I used to sit up at night. There was a website. Any of you ever hear of this guy? Look, he's got a jacket. He's got a jacket with a badge. It has his logo on the corner. Kevin, he has a free membership. And I spent $300-400 a month. And I spent even more money because he had a webcam that I could watch. And he would sit there and look at his computer, and I thought, he's looking for trades. And I'd get up 3-4 o'clock in the morning, and I'd sit there and watch him, and he wore a wife-beater t-shirt. And he would read through the paper, and I thought, if I just watch this guy, I'm going to get it all figured out. Thousands of dollars. I feel stupid when I think about those times, but they were all part of the journey to get me here. These were the histogram times, Vanessa, for the E-mini S&P today. Every one of these times had the potential to be a pattern. At 8:15 we were looking for a pattern 1 or a pattern 5. At 10:55 we were looking for a pattern 2 or a pattern 4. At 1 o'clock, we were looking for a pattern 1 or a pattern 5. At 1:50, we were looking for a pattern 2 or a pattern 4. At 3:10, we were looking for a pattern 1 or a pattern 5. And at 11:30, we were looking for a pattern 2 or a pattern 4. You've had this histogram now since, get off my screen, since Tuesday. You've had this histogram since Tuesday. There it is. There are the times. There's the link. Can't change it. What happened at these times? Does it fall inside of our window of accuracy, more importantly? Melissa, did the market go up at 8:15? Did the market go down at 10:55 and start to trend down at 11:30? The trend was supposed to go up until 11:30 and then go down after 11:30. Jason, do you see how the moving average changed color? At 1 o'clock, we're off by 1 bar. And I'm going to call a mulligan when I'm off by 1 bar. George, can you see right here how it was 1:05 instead of 1 o'clock? At 1 o'clock, the exact low is not in. They slip 1 more bar. And there's my telltale consolidation range, the one I'm looking for a breakdown of. I'm going to call that one. If I'm within 1 bar, I'm going to take it. This is a 120 period exponential moving average, Pat. Hey, Vanessa, do you see why 150 was a pattern 4? Doesn't it look an awful lot like this thing? Right there. Jason, is it weird? We learned 5 patterns today. The 5 words the banks are communicating to one another in the shady halls and secret places behind the curtains where the deals are made. And 2 days after I gave you the times, this one worked. The one at 310 didn't really push up. So I'm going to keep it there. There was a consolidation phase going into 810. The size and the wicks of the candles, the size of the bodies of the candles are here. Melissa, I would have included that. And here's where I get to say in hindsight what I would have done, which means nothing. I teach a system that tells people to go short right there. But I'm not going to count that one. Wallace, are we still in our 60 to 70% window of accuracy? On the E-mini S&P 2 days later? Did it do what we were expecting it to do most of the time? More than half of the time? Yeah. It kind of begs the question. If this is going on all the time, it kind of begs the question. Why, after seeing this, if you know it's happening, you know you can have it, would you not want to know the times? This is the insanity of the world that I live in. I have a reputation online for being a hothead. I don't have patience, and there seems to be an ever-dwindling supply of it the older I get. Because every week I show this to 80 to 100 people, and 1 or 2 of you latch on to it. 1 or 2 of you get it. But every week I ask this question: why would you not want to know the times? It's an interesting psychological dilemma, isn't it? If it's possible to know, why would I not want to know? Okay. For example, many of you trade the bonds today. Can everybody see what the bonds were supposed to do from the open to the close? There's 930. Guess what? Pattern 2, pattern 1, pattern 4. Pattern 1. Waldo, you haven't read enough of the forum posts. You'll get there. I'm better than I used to be, but I have miles to go. But I'm passionate about this because if you could know the bonds were going to drop from 930 to 940 and that the trend would probably reverse because of the pattern 4, and it was definitely going to push back up at 12 o'clock. What that means, Waldo, is this. Most of the traders today were buying right here. Most of the traders, Waldo, were selling right here. And most of the traders, Waldo, were selling right here. Isn't that what we agreed on? $60 to 70% of people were doing the opposite to provide liquidity for the bank's trades. Right there. In case you haven't figured it out, this was most traders today. This was most traders today. That was most traders today. This is what the banks do. We are slaves. We are lifting the blocks of orders that they create and pushing the market in the direction they want it to go, with the false assumption that one day we will have freedom. And many of you are incredibly intelligent people. You are entrepreneurs, you are doctors, lawyers, you are successful in any one of a number of trade jobs. You're brilliant welders, pipe fitters, carpentry, home builders. I've met everybody. I'm like Johnny Cash. I've been everywhere, man. And at the end of the day, here's why I believe most people don't buy my software. They don't want to admit that they were this guy. They live, not to use another Egyptian joke, but they live in denial. Not me. That wasn't me. This isn't happening. Not me. No. Somebody else did that. I didn't do that. Let's see if I can crash this piece of crap NinjaTrader. I may have to reboot. Yep, I'm going to reboot. Okay. Vanessa, that's fine. My associate Kristen's going to follow up with you, which is probably better because she's been understanding a lot more too. She's probably got about 6 months training on you. And so it would be good for all of us to be in that conversation. Is it okay if she reaches out to you? She'll hit you up after the webinar. I really appreciate you coming. You're almost there. I can't wait for you to cross over. But she'll reach out to you and ping you, and then we'll get you squared away. Okay, the guy who first figured this out, he's dead now. He's dead now. And here's what he said. He said, Time is the most important factor in determining market movements. And by studying the past records of the averages of the markets you trade, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. He also said, now by a study of the time periods and time cycles, you will learn why tops and bottoms are found at certain times. He also said, after exhaustive researches of all the science stuff I could find, I discovered the law of vibration enabled me to accurately determine the exact points, the exact times stocks or commodities should rise and fall to within a given time. And then listen, again, from the grave, the working out of this law of time predicts the effect long before Wall Street is aware. Predicts the effect, predicts, always in the future, always based on time. And so everything here today is not a new invention. Everything here today is not a new invention. I'm not saying I'm Henry Ford or anyone on our staff is Henry Ford, but look at what we've done. I'm going to use his words. I haven't invented anything new. We've simply built a tool based on the other discoveries of other traders behind whom were centuries of work. The progress of this indicator suite happened when all the factors that made for it were ready. And then success with the tool set was inevitable. What factors make us finally ready? Number one, your trading computer. Most of you have a computer that is between 2.0 and 4.0 gigahertz. That's an average of 3 million calculations per second. Did you know that 10 years ago we could barely generate a histogram on a PC? We are doing things with computers that the people before us dreamed about. Imagine Gann calculating all of that information in his head or on a piece of paper. You've seen his squares of 9. They're like an abacus compared to an Intel i7 quad-core processor. Okay, what else makes this possible? The internet speeds. You can get data to do these calculations from your broker in micromilliseconds. And so you have vast amounts of data to analyze. So for the first time in history, for around $4,500, you can analyze and project the times the same way the banks are with their trillion-dollar resources, and only be off 35 to 40% with an accuracy of 65 to 70%. Do you understand how crazy that is? Pat, how much would that same computer have cost today that we own 10 years ago? How much would a quad-core processor, i7 3.9 gig with 16 gigabytes of 2800 bits per second RAM cost? You couldn't get it. You couldn't walk down to Best Buy and pick one up. And so when Gann says all of the factors, Ford says when all of the factors that make for it were ready, These are the factors that are ready. You can do this now. Exactly, George. As much as a computer in Gann's time would have cost. Right? Here's the example in the Canadian dollar. Mel, we will never be heralded or remembered. Right now we're trash and lambasted. How many of you think Gann was received well when he first pointed this out? Anybody? How many of you believe Gann's teachings were received with accolades? They hated him. Do you know they hated him? There's an interview that proves it. This is Ticker and Investment Digest. Richard Wyckoff, the editor, is interviewing Gann, and here's what he says. We submit this in full recognition of the fact that in Wall Street, a man with a new idea, an idea which violates the traditions, an idea which encourages a scientific view of the markets. Mel, what does it say? They throw a parade for him. They love him. He will be remembered and heralded for their contribution. That man is what? Not usually welcomed by the majority. For the reason that what? He asks them to think and do research. He stimulates thought and research. Here's the kicker, ready? Here was the reaction when Gann first brought it up. These activities, thought and research, the said majority abhors. What's another word for abhors, Melissa? Hates. It doesn't sound like he was received well. It doesn't sound like if he gave a webinar, he would have been accepted. How many of you ever heard of something called the Delta phenomenon? Something another famous guy got involved with, Wells Wilder. Do you want to see something cool before I show you the Canadian dollar real quick? Remember the Rosetta Stone. Remember this pattern right here. Ready? I did this with Anthony yesterday, and I want you to see what kicked in. I've got a screenshot of a page from his book. Wells came across a man who believed he could predict when the market was going to go up or down. George, I didn't give the forecasts out for the pound yen, so I can't review them because otherwise I'd be making it up after the fact. So Wells Wilder takes over the Market Delta Phenomenon book, which says that the banks are following a pattern in the markets, and you can project those patterns in the future. Ready? Everything on the bottom of your screen, Carrie, is a buying pressure time. Are you with me? Every one of these squares was a date that the Delta phenomenon projected would be a buying pressure time. Are you with me so far? Every one of the times above is a date that they projected would be a selling pressure time. 19, 21, 23, 2, 4, 6, 9. Everybody get it so far? Now watch this. Melissa, you understand that when it says number 1 over here, that this candle up top in our software, we would have a green dot right here, right, Melissa? Okay. Now hang on, because this is going to hurt. Do you see number 20? Number 20 is going to be a green dot too, right? Now follow my cursor up, because I don't think Wilder had the Rosetta Stone. It's this candle right here. Jason, what pattern is that green dot? What do we get to do? Candle number 1 and candle number 3 are pattern 4s. Melissa, do you see what he tried to do? He tried to explain it off by saying, well, the pivot came in over here, so I wasn't too far off. Do you see how I did that? The pivot came in over here, so I wasn't too far off. But when we apply what I've learned, he was right on the money, wasn't he? But he didn't know. He didn't know that this was a pattern 5 higher high. Jason, you see where else it happened? Check it out. Ready? You see number 4 up here, Melissa? That's a selling pressure time, right? It's going to be a red dot. It's this candle right here. Jason, what is that candle? If I put a red dot on it right here, what do we get to do? What do we get to give it? We get to give it a green arrow right here and right here. Melissa, did he know how close he was? Can you imagine how frustrated that poor bastard was when it was off a little bit and he didn't know what we knew now? Because other times it was right. 22 was right on the money. That's a pattern 1. Number 1 was right on the money. It was a pattern 1. Number 3 was right on the money. It was a pattern 1. Number 5 was right on the money. It was a pattern 1. And then when you put the red pattern 2s in there, that one was right on the money. Number 6 was right on the money. Number 23 was right on the money. Number 21 was right on the money. Number 19 was wrong. When I show you this crazy chart, I need you to understand how important it is. I am building on the discoveries of great men who came before me, great women who came before me. I'm not the first person to figure this out, but I am the first person to put it in a computer that any trader can load and have on their screens like they didn't do any work to get it. Okay, in the Canadian dollar, we had the forecast. Here's a pattern 3. Chop, 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 chop. Everything I said we would do. Starting at 9:15, I contain the bodies of the candles in the chop zone. Wallace, you remember what I said we do inside of a chop zone? We keep track of where the highs were. We keep track of where the lows were. And when the market emerges from one side, that is the direction it will trend in. Everybody remember this pattern right here? Whoops. Stand by. My apologies. We're getting close to the end, I promise. Everybody remember a pattern 3? If it exits the chop pattern here, it'll trend up. If it exits the chop pattern here, it'll trend down. Waldo, what did it do right here? Pops the cherry right there. Enter on the candle close right here. Where's your stop going to go? Your stop is going to go just below the consolidation range right here. If no one ever taught you, here's how to trade a consolidation range. Your first contract goes 100% of the range. Your second contract goes 200% of the range. So target 1 is here. And do you see the first place, George, that it hits the wall? Target 2 is here. Do you see the second place, Melissa, where it slows down? It hits the wall here and stops. And here it hits the wall and stops and slows down for almost 4 hours, 3 hours, 2 hours. 11:30 is a pattern 1. If you didn't take that trade, you had another opportunity, because at 11:30 you had 2 histograms lining up above the green line. And what's supposed to happen when you have a pattern 1 in the direction of the trend? Anybody? This, right? Did what happened at 11:30 in the Canadian dollar take place the way we were expecting it to? Yep. By the way, in the Canadian dollar, for those of you that are more advanced, we have a canaveral pattern right now. There's the height of the 545 candle, and here's the brand new high. This signal right here is a canaveral. If you're more interested in that pattern, we haven't taught it tonight. It's number 6. Historically, that usually leads to the market returning to the moving average. Okay, so here's the thing. As we come to the conclusion here, it worked on a Forex pair. It worked on a commodity futures, a futures commodity. It worked in the E-mini S&P. And it also worked, it also worked, stay with me, we're off by 1 bar there. It also worked in the bonds. And I'm going to put that back because we had the crash right after that. where do we go from here? Because what we appear to have stumbled upon, what you appear to have found today, is the following. It appears that we've discovered a way to not fall into the traps where we do the opposite of what eventually happens to the majority of losing traders, using the bank's own times against them. What's that worth, do you think? What is that worth in terms of mistakes made in the past, potential for the future? Many of you have been following my videos on YouTube. Many of you today are watching to see if what I said was going to happen, happened. How many of you have been watching the spring pattern updates on the YouTube channel? Anybody? What happened today? What we were looking for last night, right? Right. You can visit me right now if you want. And on the daily time frames, we've been predicting what should happen. And I've been following these patterns, and I said to watch very specifically for something today. I've been telling everyone to watch. That's right, Waldo. Watch to see if that candle closed right there. This was the one we were watching. We said, Waldo, to watch and see if it touched that bottom line. And if you watch this video, you'll see what the banks are most likely going to do now for the next 25 days. I'm going to put a copy of that YouTube link in here if you haven't watched that class. And you'll see, based off of a pattern that the banks have been following for going on 6 years now, they've telegraphed what they're about to do. But it's not any different than what I've been doing intraday here today. Any questions about any of this so far? Anything that you find distressing or confusing, or a point that we made that we should have taken some more time to cover? Or have I broken through? Have I gotten in and made my point? Because we reach a point where I can talk about this forever, but at the end of the day, we're just saying the same things over and over again. Okay. Here's what I'm going to do. Here's what thank you, Pat. Here's what I'm going to do. Let's stop here. Let's stop here and just go over how to get started. It is Good Friday tomorrow. For many people, secular or otherwise, tomorrow represents a time of new beginning. Mel, that's awesome. The fact that I teach you anything, Mel, it literally blows my mind away. I literally sit here and go, it's like a sixth grader telling Einstein something and he goes, oh, now I understand how quantum mechanics and the theory of relativity combined. You're either lying or I was better than I thought I was. So I'm going to pretend you were lying. No, I'm serious, man. How could you learn anything from me? You got some miles on your tires, brother. I'm just a pup. I am just a pup. Friday represents whether you're in the Easter Bunny, Jelly Bean, Chocolate Bunny crowd, whether you're a person of faith. This time of year represents a time of new beginning, rebirth, and not to over-dramatize it, but it's time for a metamorphosis. It's time to not be part of the 60 to 70 to 80 to 90% of people who have dedicated themselves to being slaves for a ruler, building pyramids for people who care nothing about us. I want you to be free. I want you to turn, repent, in a sense, right? Acknowledge the mistakes that we've all made, blindly following these really bad ecosystem partners and vendors and people that never should have been allowed to have a website, who were really good at selling us hopes and dreams. And it's okay to admit it happened. It's okay to admit that you fell prey and victim to it. I can admit it, and many of you can. But if you're going to hang on to that thing, if you're going to hang on to that pride and not admit it, then you're not going to change. Nothing's going to evolve. There'll be no metamorphosis. And you're resolved essentially to pushing large bricks for an overlord. And the bad part about that is there's only so much money left in your account. I've seen husbands divorce wives, wives divorce husbands, kids lost in custody agreements. I've seen people go to jail. I've seen churches split up by one trader who promised them a return every week for their investment. Trading futures. I've seen grown men sell off their entire businesses that they inherited from their father, that they sold off all of the equipment, all of the rights, all of the sales, all of the territories, and lock themselves in a room for 20 hours a day, believing if I spend 5 more minutes here, I'll learn something that'll get me that much closer. One more layer of the onion. I'm almost there. Never to get there. If you can know the times in advance, now that you know the 5 patterns, if you see that this has been constant, back through the 60s and 70s and 80s with the Delta phenomenon, back through the 20s and the 30s with Gann and his square of 9, time has always been the emergent dominant factor. King Solomon said, everything under the sun that has happened will happen again. Those who do not learn from the lessons of history are destined to repeat, right? The banks are just repeating the same patterns in time over and over and over again. If you don't want your trading life to be a Bill Murray Groundhog Day movie, then this link is for you. Please, one last time this week, one last time this side of Easter, click on that link with me, the traditional clicking of the link. Here's what I want you to have. I want this for you. You're going to get the 2 indicators, the power zone trend indicator, the power zone histogram, and the momentum histogram indicator, the one just above it. You're going to get the peak times displayed on the bottoms and tops of the histograms. You're going to get the time cycle markers that are printing above and below when it's time for the candle to indicate potential buying and selling pressure. I didn't go over any of these tools. I didn't go over any of these tools. I didn't go over any of these tools. I didn't go over any of those tools. But you get all of those too. When we first started the company, all we sold was this. And people bought it dozens at a time for what I'm asking you today to invest in us and in your education. In return, these are all the advancements we've made since then, 9 years ago, and you're getting all of that extra stuff for free. And in a minute you'll learn that all of the upgrades we make to the software are included for the future. I know how to teach this to people. We have a very brilliant staff of trainers, installers, associates, traders that share their knowledge with us. And here's how it works if you want to learn. Average learning curve is 4 to 6 weeks. First, we're going to install it for you on one of 2 computer licenses you get. It takes about 45 minutes to do it, and you're going to love it. We're going to give you some basic sample chart templates to start working immediately. Second phase of your career involves 6 months of training in our live training garage. It's not a trading room. We don't call out live trades for people to enter and exit because we want our egos to feel good. We will train you how to use the software using any one of a number of different trading techniques. We teach various methods, including systems like the stoplight trade, the Hail Mary trade, the game on breakout trade, the caveman trade, the Willy Wonka 1 and the Willy Wonka 2, stupid names that you'll remember when you have Alzheimer's because they're so dumb. That's the place the training takes place. For a more focused approach, for those of you that know you need it, I give out 2 hours of my life, something no other vendor does. Because I found when people have one-on-one time with me in the beginning, a switch flips and they get it. I'm going to log on to your computer via GoToMeeting and GoToWebinar, and I'm going to set up all of your charts to look exactly like what I have here. I'm going to give you all of my settings so that when you sit there and it's time for you to put the indicator values in, you're not going, oh my God, oh my God, oh my God, oh my God, so many numbers, oh my God. I'm going to give you all of my numbers. These values are based on 10 years of observations as well as 10 years of interactions with customers who do this every day. Do not reinvent the wheel. 2 hours split up in 1 hour segments. Finally, for those of you that are overachievers, your mom never pat you on the back when you got a 96 and said, why didn't you get 100? If you want to study on your own when we're all asleep, or you're in Singapore, for example, or over in the UK and it's early here, we have an on-demand video library loaded with classes ranging from very basic chart setups to full-on, full-blown trading systems, trading psychology classes, how to backtest and forward test a trading system, sample trading plans that you can develop and integrate in your business. All of those things are available to you for the lifetime of your purchase. As long as you have lung air and heartbeat, you can get in there and check it out. This is also a transferable license. Many of you are getting old. I had an 85-year-old customer who said, if I die, can I leave this to my son in my will? He's a trader too. Absolutely. This is transferable if you sell it to somebody or you hit the lotto and you want to give it to Earl up the street who trades pork bellies. We're going to treat Earl like a brand new customer and he gets all of the rights and privileges you got. So if you leave the gene pool and you want to pass it along to a family member, it's yours to pass along, and we will honor that as a new purchase with the next customer. The software is normally $24.95. I take $500 off so you'll think I'm a nice guy. Mostly because I don't want you to leave here without it. It makes me sad when I show this to you and you're here and you didn't have it and you could have had it and you left. It makes me sad when everyone I ask says 70, 80, 90, 100% accurate and people leave and not buy it. It really, I take it very personally, and I'm getting better at not doing that. So to help you over that hedge, I don't know why, but I take almost 25% of the price off when you're here. If you sat here and listened to me this whole time, wow, let me meet you a little bit in the middle. I'm going to take some money off. More importantly, if you don't have it all now, you want to sneak it in there before your wife sees it, before your husband knows what he did. What is it? It's better to beg forgiveness than ask permission. I'm not saying you should do that. Please don't tell them that I said you should do that. I'm just joking. Break it into a payment plan. 3 payments, 4 payments. If you click on that button, you're so close. You're a couple keystrokes and a mouse click away. Choose your payment options over here. The promo code is already rolled in. At the end of the day, it all comes down to this. You are waking up on Monday, you are waking up on Tuesday, you are waking up Wednesday of next week and deciding that you're going to take your piece of crap lagging indicators and you're going to do battle with forces who have reigned supreme on Earth for hundreds of years. You're going to put your Intel i7 quad-core computer loaded up with your zero lag EMA and your volume analysis tool and your order flow blah blah blah, and you're going to put that up against Goldman Sachs and JP Morgan and Bank of America and all of these hedge funds who have the fastest internet connections, more people working for them, more programs, more algorithms than you could imagine in a lifetime. And somehow you've conned yourself, someone has conned you into believing that you're going to be okay. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. On Monday, when everyone else is taking a long and the banks are getting ready to go short, it would mean a lot to me if you weren't in that foray, if you weren't part of that carnage. On Tuesday, when the banks are getting ready to run the stops and run it right back up to the highs, I would love for you to be sitting there and see that histogram and know what they were planning to do, and at the very least not trade when your brain is screaming short. Perhaps maybe even use a little discipline, a little risk management, get in the trade and make your money back. That's what I want for you.